Hello, guys. Welcome to episode 4 of Real Estate Conversations with HP. And today we have a very, very special person on the podcast. He was a former professional junior hockey player and used to play bagpipes. He's a huge history nerd, 14 years veteran in real estate. And he's also a TV host show and a host for a real estate investing podcast, the CEO of CPI Capital, and the founder of the biggest conference in the country, the Multifamily Conference. Today, we want to welcome Seth Ferguson.
Hey, how's it going?
Good. And very excited to have you here. We'd like to know, our listeners and our viewers would like to know what your story is, because from a junior hockey referee and a player and a history nerd to real estate, and now running the biggest multifamily conference in the entire country. I would say North America. I don't know if there's anything in America, but yeah, in Canada for sure.
Yeah, it's we're pretty unique with the conference. Like not too many events like it. So
yes, and I was amazed to see like almost 3,000 people showed up in 2023, and now you're already in plans for 2024.
It's pretty cool. Like it's kind of funny too, because like if you ask me, like I hate real estate events with a passion. Like I can't stand going to events.
Oh wow.
And I think it's the reason is like most people make them really boring. So we try to make it fun, and
yes,
and I think it goes a long way.
Oh no, it always is fun. This was my second time when the conference, and hope we'll be there next year too. So okay, so tell us about your story from being a hockey referee and being into a lot of history, and then moving on to real estate, and what pushed you into real estate, and now you're like running CPI Capital. I guess you're doing big deals across North America, and you have investors, and you're also running a fund, which we are really curious on, and we'd like to know how the fund is and how to structure it and all those kind of things, but we'll get step by step. So
these are big topics. Yeah, so with CPI, it's myself and 3 partners in it, but to back all the way up, like hockey was like, if I could do anything, if I had a choice,
yes.
Like way back in the day, I was refereeing hockey, and I was fortunate to go pretty far with it. And I was trying to make the NHL, and a bunch of guys I worked with made it to the NHL. So it's kind of cool. Like I turn on the TV and I'm like, oh, I've worked with this guy for like 6 years. I did it. So what happened was I was in the US doing hockey. I came back in my early 20s, and I realized that I needed a real job to kind of help as I was pursuing my hockey dream. So I ended up getting my real estate license. So I sold houses for years, and I made what most people would consider pretty good money doing it. But I was a young guy. I had a fancy car. I had myself. And so the money was coming in, but it was going out just as fast on
yes.
really expenses.
Yes.
And eventually one day I realized I have to start acquiring real estate. So I have something left over. So then I started doing single family home stuff.
Okay.
When my son was born, I switched over to multifamily.
Oh, okay. And what kind of deals are you doing right now?
Oh boy, yeah. We were just in Florida last week with the team, walking a bunch of deals. We're actually we're in the middle of an offer process right now with one. So our targets are 100 plus. So deals generally 150 to 200 and a bit units. We're value adds, so we're looking for that forced appreciation play. But yeah, so that's our target, and we're generally a B minus, C plus to B minus range. Value add play.
And then you bring them to A minus kind of thing, and then you exit, or you hold it long term?
Yeah, so generally looking for a 5 to 7 year game plan, depending on the property. Yeah, so it's really property dependent, but yeah, we're looking to exit after that business plan is executed.
Yes.
And we've taken the property from where it was to where we want to take it.
Yes, and CPI Capital majorly focuses in the US or in Canada too?
No, yeah, with CPI, we're strictly focused in the US. So very bullish on Florida right now. Like we're looking at 3 markets in Florida, and then also Texas, Arizona. But right now, like we really want to get into a couple markets in Florida, so we're working pretty hard at it.
Okay, and what made you move from Canada to the US? Like, was there the landlord-tenant board or any other reason too?
Yeah, well, there's a lot of reasons, right? Like all my single-family investing experience was in Ontario, in the Greater Toronto area.
Yeah,
and you know that presents some challenges, right? With the GTA, with the single-family stuff. So when I started looking at apartment buildings, a lot of the guys who helped me out when I was starting were in the US. So that was one pull south of the border where, like, some very successful guys who I was looking up to were doing it in the US. Also at the Canadian market versus the US market. Like in Canada, we are so small. We are like a drop in the bucket compared to the US. You look at the number of major metros, over 1 million people. The Canadian list is very small. In the US, a lot more. The investor database to draw from is much larger. Depending on the state, you've got policy that is more favorable to economic growth. Taxation structure is different. So like there's a lot of benefits. And I think it was telling, over the past couple of years, a number of my friends have actually moved from Canada to the US.
Yes.
So I think, I think we have a long way to go in Canada in terms of changing the way we think about real estate investing and the policy associated with that to fuel the growth we need. Because right now we've got a housing crisis and the policy are not doing anything to help it. So
yes, absolutely. And plus then we also have the LTB, which is again another trouble, right? Especially for the landlords.
Yeah, and it's kind of funny. So in the US, people complain about California rent control, and then you compare that to rent control in Ontario, for example. Ontario is much more onerous. It's like you don't have no idea. So and that we could talk for hours about that, but yeah. So for a lot of those reasons, that's why we focus in the US. And you look in the global marketplace, like the US is a economic juggernaut, and capital from all over the world wants to go to the US. So for all those reasons and more, that's why we focus south of the border. Okay,
now you were into duplexes, triplexes, like the residential side, right? Here in Canada, when you were doing, moving from that piece directly to like 100, 150 unit buildings. What were the challenges, or how did you expand to that level? Like, because it's not easy for anyone to even think of like going from a 2Z or a 3Z to 100 units, right? Even if it's in the US, the price per door is cheaper compared to here, but it's still not easy. Like people don't even think on that side.
Yeah, well, it's very market dependent, price per door, right? Like if you're in Seattle, New York, like it could be.
Yeah, it's comparable. It's comparable. Yes.
Yeah. But yeah, I think that the biggest thing that I had to get through was like how I thought about real estate. So it's like myself and a lot of people when they first started, you think that, I have to start small because I'm just starting out. Or, hey, I have to own the house, I have to fund it myself. So like at the time, it was myself and my partner at the time, we were doing all these single family home deals.
Yes.
We were self-funding, and my brain, my thinking was just so small. I never even considered partnering with other people to get more capital into the deal. I never thought about, what happens if I just looked at larger deals? Like I always thought I had to be super rich or a big life insurance company to own an apartment building.
Yes.
So it was my thinking that was wrong. And I remember the time, the single family portfolio, it was gone. I remember I maxed out my credit card to go to Philadelphia to a real estate group. It was for like syndicators and fund managers, and I was invited to go. I maxed out my credit card, to get myself in the room. And it was the best thing I ever did, because I was now exposed to how people actually thought about real estate in like on the bigger commercial side. Wow. And it changed how I like saw real estate, looked at opportunities, and I realized that there's like trillions of dollars out there looking for a home.
Yes.
Just never even dawned on me before. So I would say like number one, the biggest switch is like just how you approach the asset, how you think about it, and how you structure deals.
Yes, absolutely. And now coming from the structure, now you operate a fund, which is which we would like to talk about. Like fund is not everyone's to-go thing, right? People mostly syndicate deals, or they'll have a GPLP structure, but then now you have a fund, which is over and above everything, right? So give us some thoughts about fund and how, what are the differences in a normal syndication versus a fund? Easier, sure. Challenges, all those kind of things. So if you'd like to talk about that, yes.
Yeah, so the main decision to go with the fund, and again, like just so we're clear, like it's for our Canadian investors.
Yes.
For US investors still syndicate into the deal, fine. The challenge with Canadians investing in US real estate is taxation, because CRA and the IRS don't play exactly on the same page in terms of rules. So if I get messages every single week, people will acquire property and invest into an LLC, but then they get double taxed when they repatriate the money because it's not structured the right way. And there's a lot of complexity to it if you're not familiar with it. So the reason why we launched the fund for Canadians investing in the US is because it makes things really simple. So now the Canadian investor is able to invest their money in the Canadian fund, and now we are able to take that money across the border. We take care of all the paperwork, all the structuring, all that stuff, and then we can deploy it in one of our deals. If we didn't do that, it would just be a lot of legalese and accounting work, and it's just it just adds a lot of friction.
Yes.
So, number one reason we did it was to make a better product for a Canadian investor. So that's why we launched the fund. Now, if there's a larger family office perhaps who wants to invest $1 million, $2 million in a deal, they'll actually syndicate into the deal as normal. But fund for your if somebody is investing $100,000, $200,000, $300,000 in the fund, they're able to do that in a very simple, easy way that eliminates all the headache stuff.
Oh, okay. So it's much more for the investor who wants to invest smaller amounts of money from the Canadian side and wants to invest in the US deals.
Yeah, it's just a way more efficient way of doing it.
Okay.
That is structurally compliant, so that way you don't get into trouble with taxation. It's just because we've paid so much money in terms of the accounting structure, our legal structure, and all that stuff. We're getting the best of the best advice in terms of structuring and how we have it set up. So just use what we've already done. And it's the most efficient way for a Canadian to invest in a US apartment building.
Okay. Now coming to the challenges. So this was the good side, right?
Yeah.
It helps. But when you were actually building the fund or creating the fund, working with legal advisors and accountants, were there any challenges that people should know of, that if you were to do it all over again, creating that fund again, can some of the challenges can they be avoided, or it's just a smooth sailing process and the legal and the accountants and all those kind of people, they just take care of this? If you have, of course, you need to have the good ones on your side, but from your perspective, right?
Yeah, so I think whether you're syndicating or doing a fund or whatever it is, you need to have the right advice and guidance.
Yes.
And especially, with us, because we have that cross-border situation where we have to make sure somebody is familiar with both sides.
Yes.
In securities, U.S. securities and taxation. what we found was not a lot of people have that experience on both sides in operating funds from Canada and moving money into the US. So finding the right advisor was challenging because like there's a ton of people in the US who know US real estate really well and the structuring and the compliance, but they don't necessarily know the Canadian side and vice versa. I think that was the biggest challenge for us in finding somebody who actually had done it at a large scale and who had the background and the pedigree. That was important to us. So yeah, like number one challenge was finding the right person to guide us through the process who's already done it. So.
Yes, absolutely. No, that's the like not so fun part, because there's a lot of due diligence, and because on the outside it just seems that everybody is doing the good work, but not really everyone is equipped with the right things to actually launch this kind of fund where you are investing money in the US, right? And the fund is Canadian. So the US and US is good. Like the US fund invest in US, Canadian fund invest in Canadian, but Canadian fund investing in the US is like whole, like country to country, cross border, right? International.
Yeah. And when you get into the cross border stuff, like different accounting firms, different legal firms will have their own opinions on the best way to structure things. And at the end of the day, you've got, we got many different opinions from very top tier, like accounting, like we're talking like top 5 accounting firms. So like these guys are very, very smart and they do this like on a daily basis. But, you can talk with one firm, they'll say, okay, well, this is the best way to structure it. Another firm, they'll be like, no, like this is the best way to structure it. Both are right, but this is where you need a solid advisor to say, hey, listen, like we're getting this advice. It seems a little contradictory based on your experience and what you've done for the past like 10 funds you've launched like this. Which way would you do it and why? And that's because, you need that clarity aspect.
Yes.
And it's whether you're new in real estate or more experienced, like if there's no clarity and focus, you get kind of lost. So that's that advisor is really important.
No, absolutely. And I completely agree with you. Okay, so for that fund part is now there. We'd also like to get into you're still the host of a cable TV show and a podcast. I do follow that podcast. You provide a lot of good information in there, and every, I think Wednesday or Thursday you go live in there, right?
Yeah, we go live. We had to put all that stuff on ice because of the conference, because it was.
Oh yes.
We're starting that back up very soon.
Okay, yes. And about the TV show, what kind of a TV show it is and where can people watch it? So it's a cable TV show called Real Estate Simplified, and it's available in I live just outside of Toronto. Okay.
So I place a ត្ថຈccc subscriber. It's one of the cable networks here. They're able to watch it anywhere in Ontario on demand if they want to. And we cover a wide range of topics. Like it's not necessarily real estate investing focused. Like we'll cover selling your house, renovating a house, commercial investments, industrial, like insurance aspects with real estate. So it's more a general interest show focused on real estate.
Wonderful. Okay, and now coming to the conference, like I know you are already doing so much, like a TV show, a podcast, right? And then the hockey, and now you and you operate the fund, and now you came with the conference thing, which is now the biggest event in the country for investors. So what made you do the conference? Did you identify a gap in the market, or I know it's an opportunity because I have not seen a conference that big in size. I mean, there may be, but they're not real estate focused, right? Especially the multifamily piece. And now people are coming from cross-border. I met people in there from, like, they were from Nova Scotia, they were from Halifax and New Brunswick. I even have friends now in Saskatoon because of the conference, right? So you went at a very, very grand scale. Like people would go in steps. You just directly opened it for the whole country. Like that needs a mindset that is like really, really expanded. So talk a little bit about the conference, how you got to start it, and what made you think that, okay, this is an opportunity or a gap in the market which you can cover.
Yeah, for sure. Well, we had people from the Netherlands come. We had people from Africa come. Like
wow.
we were drawing people from all over the place.
Wow.
But yeah, so what prompted the conference was I was very frustrated when I was making the switch from single family investing to multifamily, that there wasn't a good resource out there for someone about multifamily. Like in the US, you've got some more exposure to it, but in Canada, it's like nobody celebrates it, nobody talks about it. Like it's all very, like Canadians, like this will be my controversial statement of the interview. So Canadians think very small in general, right? I'll throw the stats with you. So an American on average will buy a ticket for the conference 2 weeks faster than a Canadian.
Oh, wow.
And we found raising money, an American will actually commit to the investment before a Canadian. So Americans, generally speaking, and this is a big generalization, but Americans tend to be faster with their decision making than a Canadian. And I think maybe it's cultural, and Canadians like to be really reserved and
yes.
But yeah, it definitely plays with that. So here I am, trying to learn more about apartment buildings. I couldn't find anything for apartments in Canada. There wasn't really anything out there. Most of the stuff was for Americans in the US.
And it still is. Like, apart from this, I have not seen any, like, there are conferences that happen. There may be land, there may be developers, builders, but specific focused on investors investing in multifamily buildings, I have not come across at this grand scale, right? There may be corner shops, like maybe 10, 20 people, but not at this scale.
No. So, what happened was in the pandemic, everything had just shut down. Like I remember I was at my girlfriend's condo, and the roads, like nobody was on the roads. It was like, and we were watching Shark Tank, and I turned to her, like Kevin was on, like doing somebody else's evaluation. I'm like, you know what? I'm going to have Kevin O'Leary speak at a real estate conference. And she's like, yeah, whatever. I'm like, no, seriously, I'll make it happen. And I had Kevin booked like a couple days after that.
Oh, wow.
And that was the start of the conference. And I had no idea what I was doing. I'd never run a conference before. I'd never run like an event. And we just I knew I was bringing Kevin. I needed to find a venue. We found the venue, and then I started bringing speakers in. And what that was, I'd done the podcast before, so I had built out my network. And that's really what it was. Like, I was just frustrated at the lack of exposure for multifamily. And I was also frustrated, like I mentioned at the start of the interview, at, anytime I did go to an event, it was really boring. Like you have the ballroom, you have somebody with the clicker and the PowerPoint screen.
Yes.
I was like, you know what? Like, why don't we just go big with it? And, one of the things I've learned along the way, and this is very applicable to real estate too. If I would have started like a 300 person event for multifamily, I've been just like 20 other events like that. It's kind of like if you have a real estate deal and you're doing a triplex, there are hundreds of other triplex deals out there if you're looking for money.
Absolutely.
And big with it. People got excited, and other people, because they got excited, they wanted to help. And then it kind of pushes you forward because it's new, you have the sizzle. It's the difference between, if I come to the market and say, hey, listen, like I've got this 200 unit value add play in Jacksonville, for example. And, this is the deal. And it's beautiful. We've got the pool, we've got the lake, we've got all that stuff versus, I'm doing this triplex. People will get more excited about the larger deal.
Oh, yes, absolutely.
And it helps sell it. So I think, we went really big. Yes, I took a huge risk in the middle of a pandemic. But I think because I did that, it moved us along so much faster than if I played small. And it goes back to your thinking, like, are you going to think small or are you going to think big? And
absolutely.
Yeah, and we had Grant Cardone this year at the conference, and
I
used to think his 10x mindset thing was bogus. It's so true. Like when you start bigger, like it's just like more stuff happens. So
absolutely.
happy to answer any specific questions. I know I gave you a really long answer, but
no. And coming back to your point, the Grant Cardone, right? Grant Cardone has always come across, and it like many people, a majority thinks that he's rude. What I was able to find in the conference when he was especially talking, he is a funny person. He just talks from the heart. He's just straight, right? He just talks whatever he thinks of, and people sometimes think that's rude, but really at the conference, I didn't feel anything about that was rude. It was like funny, and he was talking the actual truth, because people would try to hide the truth and walk around things. He just doesn't do that. And people like that, walking around things and coming out politely. He's just blunt and whatever. Like I like that style. And that really pushed me that, okay, sometimes I also do some walk around things that, okay, the people will feel nice or not. But yeah, keeping it straight also works. And now he's at that level, right? Where it definitely works.
Yeah. And it's, it's kind of funny. So like, we had Kevin O'Leary in our first year this year with A-Rod. And, Kevin O'Leary, another person, right? Some people say he's abrasive, but you know what? Like, you're talking with him one-on-one.
Yeah.
Great guy, right? Great guy. Same thing with Grant. Like, you've got your persona if you're doing a video on YouTube.
Yes.
Catches attention one-on-one, like very, very respectful, like very respectful. So, but yeah, like it's so true. And, once I started thinking bigger with it, it's like you start, I think the best way to frame it is, instead of thinking, well, I can't do this, it's like, well, how can I do this?
Yes.
So, hey, I want to put 2,500 people in the room. It's like, oh, it's too big. I can't do it. It's too soon. It's like, no, okay, well, how can we do it? And it gets your brain thinking about things a different way.
Yeah, and we saw it in this year, right? And at MTCC. Will the 2024 event, will that be in MTCC as well, or you'll change the venue?
Yeah, I can't, like, nothing's official yet. But yeah, like I thought the venue this year was great.
Yes, and it's big, it's huge. And I think even if there are like 10,000 people someday, it can cover that amount of people, right? The people can be there, because it's gigantic. Like, I haven't, like, there is nothing bigger than MTCC, I guess, in the GTA, of course. We had 160,000 square feet of space. Whoa.
And that allowed us, because, in our first year, we had COVID lockdown, so all the venues wouldn't let us in. So A Center, the venue we had the first year, they were the people who took us in when they weren't supposed to. But this year with MTCC, because we had the space, the big screen we had, that was 180 feet long. So like, it's huge, but MTCC gave us the space and all that stuff to us to do things on a big scale like that.
Okay. So, and again, coming to 2024, who can we expect?
Yeah. So we are having some pretty cool conversations with people now. I can't say anything because like we haven't like officially signed them. But yeah, like we've got some pretty big names that we've spoken to and that are very interested in coming out. And that's another advantage, right? When you have the size of crowd and audience you do, when you're talking with these people, they get very excited and interested. Right? And it makes it easier to bring them on board. So can't say anything right now, but like I'm pretty pumped up.
But the timing is the same around the May-June's time?
Yeah. We're going to be the last weekend of May. Yeah. Okay.
And now coming to the tickets for the next year. Are you going to release them, like the link again soon, or it'll be next year now?
Yeah, it'll be probably next year. That will launch with the tickets. Like we're not, like it's just too soon. We need to get a whole bunch of stuff in order, announce and all that, and then we'll put them up for sale again for the earlier bird. You'll be like number one person with the early bird, but it'll be next year.
Okay, for sure. No, we'll wait for it. Okay, coming to the apartment accelerator, and you also, I know you do that mastermind thing that you run with specific people, right? So talk a little bit about that course, the apartment accelerator, and your mastermind. What goes into it? What is it? A little bit description, so that if somebody wants to join, and like a little bit information, if somebody wants to join, where they can sign up and how do they approach you or your team?
For sure, yeah. So the course came out again of my frustration when I was trying to learn about it. I was like, because like I remember I found this one course where they said, "Oh yeah, we'll teach you about apartment building investing." So I bought it. It was pretty expensive, and they mailed me a binder like this thick, and it was like paper. That was the course. They mailed you a binder. I was like, this is ridiculous. I just paid a couple $1,000s for a binder. So like I was pretty frustrated. So as I got going, I'm like, you know what? Like I've learned so much. Ever since I've started. Like if I had to start all over again, like I know exactly what I would do differently and why I would do it. And that's why I created the course. It's basically built for somebody who's coming in, has never done a multifamily deal before, and it walks them through step by step all the way through to their first apartment building deal. And it's very much like one of my frustrations too is people will like teach you stuff, but then they never show you what to do with it. So I'm like an action taker kind of guy, right? So like, so the whole course is structured. Okay, I'll teach you something, but now you actually have to go out and do something with it. And then I'll teach you, then you go do this. So we keep you moving forward. But yeah, like if somebody's interested, they can go to theapartmentaccelerator.com. And then there's a short video you watch that explains about it, and then you can get some more info and book a call with us if you're interested. But it really came out of there not being anything that I felt was good in the marketplace. I was looking for that when I started out.
Absolutely. And that the course focuses on investing in the US or in the Canadian markets, or?
No, we've got students across Canada and across the US. It's not tied to a specific place, and it's very customized because the portfolio like you would build is different from the portfolio I would build, because we have different, right? So that's one of the first things we cover, and then we figure out, okay, well, what's the right strategy? What are the right markets? What's the right structuring for you? That part's really important to me. But yeah, so it's a cool course. We've got a great group of people in there, and we're all making progress.
So is it like video recordings that we watch, or it's a live course where you come in and you walk through with the portfolio in the beginning, and then you make sure that the person gets there? And what's the duration for the course? So somebody comes in for 12 months. It's a 12-month program. We teach it and make sure somebody's successful in 3 different ways. You're right. We've got on-demand videos and all the tools and stuff, so you can watch that in the middle of the night if you wanted to. People in all the different time zones. And we have investor clinics every week. So that's where a good example would be, HP, if you're looking at 5 markets right now, because that's our system. I have you research 5 markets, and you're seeing trends, but you're not sure what they are. You'll come to the clinic and say, hey, listen, I'm not sure which markets to pick here because I'm confused by these numbers. Help me out. So then we're able to go through and help you through that. And then we've got a private group where you can post messages. And if you're in the middle of a deal, I don't want you to have to wait. So you post it, then we can come in with a screen recording or a written post, whatever it is, to help you out. So those are the ways we help people through the program. Okay. And these weekly calls, the investor clinics. That's a nice name, Investor Clinic.
Yeah, that's right.
Right. So are these virtual, on Zoom, or in person?
We do it on Zoom. We don't do in person because we have people East Coast
all over.
South. So it doesn't make sense to do the in-person model. Zoom is the best way to do it.
Good. And are you the one who's going on these calls, or there are different?
I hang out with everybody. And what's important to me is, we keep our classes on the smaller side, so I know where everybody's at. If there were 300 people at one time, it's too much. So we try and keep the classes in around 50 people. So I can keep tabs on everybody.
So people, go to the apartmentaccelerator.com and sign up for Seth's course. Seems very, very, very interesting. From 0 to like going into 100 unit buildings. It's a marvelous thing. So you get to learn straight from Seth, which is kind of a little difficult to get a hold of Seth. But Seth was really nice with us. And as soon as we messaged that we would like to do a podcast and we were just starting, he was the first one to say yes. So here we are today, and thank you very much for that. We are really glad that you said yes. I really appreciate it. I was really excited.
Yeah, well, you know what? Like, I remember when I started my podcast, that was the very first thing I did. And I asked like very successful people to come on. They had no idea who I was.
Yes.
And like the majority of people said yes. And I still remember what it was like starting out. You know, there was this guy, Chris Gray, an Australian real estate investor. He has a TV show on Sky News that I modeled my TV show after him. He was like the third interview I think I did. I had no idea what I was doing. It was horrible. But like he came on and like I thought it was really cool. Like here I am talking with this guy and I've just watched his TV show for years. And yeah, like I still remember what it's like starting out.
Oh, thank you so much. Thank you so much. It really means a lot. Really appreciate it. Okay, so any opportunity that you'd like to discuss that you're actually working on right now, if investors are looking to put their funds in, where they can go or what the opportunity is, like just in a brief?
Yeah, for sure. Well, I can't talk about, I can't solicit investments on the podcast. That would not be compliant.
Oh no, just a deal that you're working on. And then we can talk about where they can go and talk to, maybe you have EMDs or all the people that are security compliant. Yep.
Yeah, for sure. So, yeah, like I mentioned, we're in the middle of negotiating a deal in Jacksonville right now.
Okay.
We're excited about it. You know, we've got some terms agreed to, so you know things are looking pretty good. So that should be announced pretty soon if everything goes together. But yeah, like we're actively, like the whole team was out. We were in Tampa, Orlando, Jacksonville, walking a whole bunch of properties. We're on the hunt right now. And yeah, so the next deal, like it could be like in a couple of days if everything goes well. So we'll see.
No, best of luck for that. And if anyone wants to reach out regarding your investments, where do they reach out? Who do they reach out to?
Yeah, the best place to go is callseth.com.
Okay.
And that'll give you a link. So if you want to invest in one of those deals, you just go callseth.com, you hit the button, then you can schedule a call with us in the calendar. Yeah.
All right, people. So if you want to get into these 200 unit big deals, just go to callseth.com. I think that's a fabulous opportunity that Seth is offering for people here, especially in the US market, because I know people, think of doing US investments. They don't know how to, they are challenged legally and from the tax structure point of view. You have this all set up. They just need to do is give you the money and then the fund invests it and they reap the returns. So that's an excellent way of helping investors grow their money. That's beautiful.
Yeah. It's like we're Canadians, right? So we understand the border implications. So there's so many people that end up in sticky situations because they're not structured the right way and all that. We've made sure that somebody's all set if they come through us.
Oh no, that definitely, and that's the major concern that we see, because money is not the concern. People are ready to invest, but the problem is they're afraid or challenged. They don't know how the legal structure works or how the accounting or taxes would work, and they don't really have the right guidance or people who are doing it. So it's really, really good that what you're doing is helping Canadians grow their money in the US. And the US piece is always there, right? They already do the syndications. Yeah. Okay. Any tips for people who are doing smaller deals and they want to move to these 150 unit deals? Any tips or suggestions that you'd like to give them?
Yeah. Get out of your own way. Like, like the things we tell ourselves, it just slows us down. Like there is no difference. Well, there are differences, but like thinking of doing a 20 unit building versus a 100 unit building or a 200 unit building. Like it's all in your head.
Yes.
It really is. And so, you know, one of the things I argue all the time with people about is, you know, a lot of people will say, hey, I'm just starting out. I just want to start small and then they'll work my way up. I actually argue that a smaller deal is riskier than a larger deal. I'll explain what I mean. So if somebody's starting out in real estate investing and they want to do a duplex, let's say, right, versus apartment building. With the duplex, it's not going to cash flow if you have professional management. If you're buying in a major metro, right, cash flow is going to be tight. So you're self-managing that property. You have experience and you're going to manage that property. You're going to make a lot more mistakes.
Yes.
Because the cash flow is so tight, you have no margin for error. Because like bad repair or something, you're done for like years for positive cash flow. The loan, like the mortgage you're going to get, you have to qualify for it. You're assuming unlimited risk. With that, exposing yourself to greater risk. Like all those reasons, right? Plus, you only have 2 tenants with a duplex. One tenant moves out, 50% of the revenue is gone.
Yes.
That's going small. If we go larger, right? We're talking a 30 unit building. You have professional management who's going to site more often. They probably manage 1,000 or 2,000, 3,000 other like doors. So they know the market better than you. They've been doing it longer than you and they can give you advice. So right off the bat, that is a safer investment because you have somebody experienced helping you out. The cash flow is going to be stronger. So even if you make a couple mistakes, even with your professional manager, you'll be able to absorb those a lot better. The type of debt you can get is different depending on where you are. You could get non-recourse debt, which is removes the risk exposure from yourself. And then also you have more, the economies of scale work more in your favor. So like if one tenant moves out of 30 units, that's not as big of a deal as 1 out of 2 tenants moving out.
Absolutely.
Usually I break this down a lot more, but like just from looking at it, the large is safer for a beginner because you've got, you know, more safety nets built into it. So it's all in our head.
Yes. And so coming to the point where the lenders come in, and I see most of the people get scared or are really not into larger deals because, I have not done it. And how will the lending work? Or how will the lenders look at the deal? Why would they fund me because I don't have any experience? Any thoughts about that?
Oh, there's so many ways around that, right? So number one, like the lender, they just want to make sure the property is going to be run the right way, right?
Yes.
For their money saved. So number one, get a very experienced property management company who's managed units. Like right off the bat, be like, hey, lender, like this guy's running the property for me. Like it's going to be great. Number two, partner with somebody. Like you don't even like, if it's your first deal, partner with somebody who's more experienced. They can guide you through it. You know, maybe they become a quarter partner in the deal or whatever it is. But they can help guide you through it. It's going to look better on paper for the lender, and then you're going to get some great advice along the way. Or you can bring on, if you can't sign for the loan, like you can bring on a KP, a key principal to sign on the loan for you. Like there's so many different ways that you can do it. But again, it comes back to our thinking and how we think.
Yes, I think, and that's the right point, because there what you said was bring in 2 or 3 key partners or people who can help you get to the deal. Like the property manager, the key principal, right? Get them together. Most of the people, which I see are not able to do is, I am the one and I need to do everything and I should be able to do it. And that they're able to do on smaller deals. And that's why they're not able to move, because the partnership structure is somehow not getting into their head. Yeah,
but I used to think the same way too, right? And with the apartment accelerator, like we focus on actually building the team before we even start looking at deals. So it's just, you have to get outside of your own head.
Okay. All right. And coming back to the apartment accelerator. Now, for the podcast viewers and listeners, are there any discounts that are currently going on for the course? Or would you like to offer?
So we had a pretty cool one at the conference for everyone. But no, like the apartment accelerator is really important to me that everybody's treated fairly.
Yes.
So we don't do special discounts on like podcasts and stuff. So everybody comes in and is treated the same.
Yeah, no harm in trying, right?
Yeah, for sure.
Yeah. All right. People, here's Seth Ferguson. If you'd like to ask any questions, we'll be posting this video soon with all the social handles for Seth. If you have any questions or would like to reach out directly to Seth, please use the social media connections and the handles. And yes, if you'd like to invest in his deals or look at those deals, please go to callseth.com. And especially for the people who want to buy the courses, it's theapartmentaccelerator.com. I would really like to thank you, Seth, today for your time and really appreciate you coming on board for the podcast and helping us grow. Thank you very much.
You're welcome. Yeah, thanks.
Thank you.